Blue Line Futures with us. And Bill, I think I stole that line about the Fed is thinking about their balance sheet in the fall from you. And I do want to start there, just in terms of what you were looking for from the Fed and what might be on the minds of the market of trying to price in where this is headed, not today, not tomorrow, but in the next few months.
Well, I wish I could take credit for such a crafty phrase. I did. Fed Chair Powell really started that, and it's been kind of taken over by many market participants from there. And thanks for having me. But when we look at where the Fed expectations are, there really is no expectation that they're going to hike before 2023. The real question is, do markets have to price in the probability that this is not the case? And what we're seeing is a 6% probability going into today that they could hike rates in September. Doesn't mean they're going to hike rates in September. We've been saying that means they're going to start thinking about hiking rates at that point in time. And then that means that you're going to see the rate market and thus the currency market start to price such in. For now, I mean, the initial reaction, I haven't been able to dive too much into the statement joining you guys, but from the initial reaction, I see the dollar index backing off. We've seen a little bit of support with gold, and the Treasury market remains elevated. I think the Treasury market probably a little more elevated right now due to the fact that the equity market's under pressure. A lot of safe haven bid between the dollar and between the Treasury market right now. But one thing I'm watching here on the closing basis for the S&P is 37.90. 37.90 was a gap. It got pinged earlier in the week. We did get below there today. We closed below 37.90. I think the market's going to stay vulnerable as the week unfolds and we look out to next week. And one thing that I really want to point out is we've seen markets rebalance, a lot get digested in January, February, March, really in the first quarter. And is this the start of more of a rebalance? Do we start to see a 5% correction from here or more? So that's some of the questions that we hope to answer with where does the market close today? What does Fed Chair Powell have to say at his press conference? And then how do we look into next week into the jobs data?
I want to just play something for you. And, you know, when we are at the tops of equity market valuations or let's say speculative bubbles, we joke about things like our taxi driver giving us stock tips. Or, you know, our mother-in-law has the best investing advice. In this case, it might be a stock comes up at a White House press briefing. It's unusual for that to happen. Bill, have a listen when the White House press spokesman was talking today, Jennifer Psaki, about GameStop.
Our economic team, including Secretary Yellen and others, are monitoring the situation. It's a good reminder, though, that the stock market isn't the only measure of the health of our economy. It doesn't reflect how working and middle-class families are doing.
So taking it back to their message, you know, that we're going to focus on the middle class. It's very true, though. It is not a measure of economic health. But what do you make of the degree of speculation that's going on here? It's being painted by some as a kind of a, you know, the retail David against the Wall Street Goliath.
This is a revolution in the making for many years to come. I remember 10 years ago, there was, outside of the Chicago Board of Trade, there were protests of the, you know, the 1%. I mean, a lot of this is just happening in different corners of the area, different corners of the market. But listen, it's easy for everybody to say right now that it's these, you know, people staying at home and these guys who are just throwing money out there, or women and men throwing money in there and not, you know, just risk with no care in the world. That's not totally the case. There are hedge funds with participants involved in these chat rooms. They're driving things. There are professionals driving things, and there is big money behind this stuff. This is not just little people here at work. So just keep that in mind. But I would like to kind of shift away from that, because that's just one corner of the market. I mean, there's a lot of really good performing stocks out there right now, and I think there's some really good sectors that once you kind of go through this really rebalance here, which I'm inviting weakness. I think that's the best thing that can happen right now, is invite weakness. I hope we sell off another 5% from here, because it's going to be able to allow me to go shopping, find out the stocks that I want to hold for the year to come. And I think that's really what people need to focus on rather than panicking. And either rebalance down on the highs, or you buy some protection, and then that protection gives you cash to allocate when the market moves lower, and you can capitalize on that.
So, and let's just stick on that point a little bit here, Bill, because there is a sense that, you know, we might get a pullback, and if and when we do, it'd be great to have cash to deploy. So first of all, how much are you willing to take off the table in this, you know, YOLO market in order to have cash on the sidelines? And when you do get there, if you've got the cash to deploy, where do you think you're most likely to put it? Where are those pullbacks that you see the most value?
Listen, I've been focusing on dividend yielding stocks and what can bring me, money if the market isn't going to perform. And I think there's a lot of different areas. We've been focusing, and we really put a lot of money and balance into industrials through October and November, as well as financials. And those are two areas that we do like. We took some money off the table in financials at the end of the year, and if they could go a little bit lower from here, I think that's going to be a great place to look over the next 18 months. Industrials remain good. I think materials remain good. Ultimately, a lot is going to matter on the U.S. dollar, and the U.S. dollar has taken a break from going lower, and that's why you're starting to see maybe tech stretch and some of these small cap, some of these YOLO stocks, because it's just the rest of the market is consolidating. But one of the interesting things I really want to point out is the FANG stocks. The FANG stocks, they did not perform really at all in the fourth quarter, and then we've seen a new record high in Apple. We've seen Microsoft move pretty good after earnings. Obviously, after today's move is a little different, but we've seen a lot of stocks. Netflix woke up a bit, so I think the FANG stocks have really started to wake up, and I wouldn't sleep on those after not performing, because if you're looking at a sector-based allocation and you look at what could have performed for you in quarter four, again, that was some of the banks, that was the industrials and materials. Those did really good. Now, what's the question is what's going to perform for you in the first half of this year? And I think we're going to get a lot of those answers over the next couple of days here, and what the market does. So I would really like to see. I'm inviting a little bit of more of a correction from here. But I think too, the energy space has been stretched. I think that's a little exhausted. Another one I didn't mention that we have good exposure. We've had good exposure for a long time. We've taken some off the top there, and I think it'd be great to see energies a little lower. Crude oil, just to kind of talk broadly on it, we've been calling it exhausted, but it can't break through support at 51.50. If we get below support at 51.50, I think we can start to see a little bit of selling in crude oil, and that's going to give us a really good spot. We have a commodity fund, Blue Creek Capital, and that manages money on the commodity side for clients, and we're looking at having, or we do currently have, downside exposure through really well thought out put butterfly spreads and crude oil going out to June, because we do think it is exhausted and think there's room to the downside. That's one of the areas that we're looking to capitalize on the commodity side, and then I think as well when we're looking at the dollar, the precious metals, and I think there's really tremendous upside in the precious metals potentially, but we need to see the dollar continue lower in order for that to perform.
I just want to ask you, on this day when we have, Joe Biden signing the executive order on climate change initiatives, his new energy secretary taking questions in the Senate. I mean, it is clear what this agenda will be. Some of it we already know. And in fact, some people are reminding us, we knew this from the last time he was at the White House. So don't act surprised at the stuff that's coming your way. Does any of that change your story or the story for you on energy as you think about possible opportunities there in the next year?
Yeah, I do think that we're looking at the supply landscape shifting a bit, and I think that we're removing supply with that Keystone pipeline. That's also been a reason that crude oil has been bid. But we've also seen a call for crude oil recently too, as another reason to create those products that has bid the market. But those clean energy initiatives, that's another reason to look at things like silver and platinum. We think silver and platinum are going to outperform gold this year. We do like the precious metal space, and I think that's a really big reason to look into some of those materials and have exposure in the material stocks as well as the administration looks to infrastructure spending. So, I think these are really great places, the energies as well as the materials, industrials. I think they're all going to perform. But when I do say energies, I mean just broadly what we've seen from them already. I think they hold ground and have value at a little bit lower level. I would be looking for, but I think these are great spaces. And then we've seen the FANG wake up recently too. So I'm very excited for what the market has to give us. I just really hope we can have it from a little bit of a better level than here.
It's great to have you with us. Appreciate it always, Bill. Bill Baruch, Blue Line Futures.